Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another um, promising edition on the Forex Morning Mastery, your daily dose of financial insights and trading strategies. Um, um, I will have to take a short break right now. Something came up technically, which I will have to sort out so that we can have a better experience out here this morning. So please give me like a couple of minutes and I will be right back with you guys. And thank you very much as you do so. So I'm sorry about the breaking transmission. I had to quickly run to sort out some technical issues which may affect the the session, but thank goodness things are quite okay right now. So we are back into the session. So like I said earlier, you're very much welcome to your daily dose of financial insight and trading strategy. And so far this week, we have been monitoring three financial assets on our watch list, which includes the US OILSPOT, the USDJPY, and the XAUUSD. And since the new week has begun, the market has been very, very sluggish, as the market is currently going through a consolidation phase across board. And one of the major things that may likely be affecting this is as a result of the backdrop rising from the speculations that major central banks across the globe are likely going to be um, trying to reassess their monetary policy cycle, monetary easing cycle, due to the data that has been churning out, especially from the United States in the last couple of weeks. And as a result of this has caused a little bit of limbo in the market, where participants are uncertain of what is likely going to happen. And the geopolitical tensions in the Middle East are not helping matter. The sluggish recovery in the Chinese economy is not helping matter as well. And of course, we also heard about the United States, where most of the Fed officials and the Fed chairman have emphasized that it is likely they are going to be keeping interest rate higher for an extended period of time. So all these factors put together is affecting the market, and of course this has resulted in a couple of losses during the course of the week. And I do want to emphasize here that this kind of situation happens, and that is why I usually emphasize that we have a well-defined risk management strategy in place to ensure that we protect ourselves against such scenarios that will happen. So whenever we are taking a position, we try to take as minimal risk as possible, reduce our exposure by reducing our position size to something that we can afford to lose if price action goes against us. And this has resulted in this, and of course I know that there will be a little bit of um, doubt somewhere, somehow, in our minds as a result of this kind of scenario. And of course, these are normal emotions that usually happens to traders. But one thing that makes us professional and um, consistent in our approach is the fact that we will continue um, to have faith in our analytical approach, and of course we shall weather the storm and go through this phase and move to the other end of the journey. So at this point we shall be going back into the business, and let's look at things from a new perspective. And in fact, I have very simple trading setups that we will be using to guide our trading decisions for today. And for those of us who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to what we will be doing today, and we shall be expatiating on that today. And for those of you who are joining for the first time, you are welcome on board. And to give a quick brief of what we actually do here, the Forex Morning Mastery is a platform that was designed basically to do follow-up details on the assets on my watch list for every week. So usually during the course of the weekend, I usually share a couple of videos which emphasize my plans for the new week. And every day we come here as a community, gather together as a community to review and do follow-up details on these assets ahead of both the London and the New York session. And officially this starts 9:05 a.m. West African time, 8:05 a.m. UTC on a daily basis. And it's also important for you to note that my aim here is to equip you with the knowledge and skills necessary to make your own independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information you gather in this community to make to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. I see your comments, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. Trust you're doing very, very well. So with that being said, we will be diving right into the business as usual. And the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And we all know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now for today, Wednesday, February 7th, we have we just like yesterday, we do not have any event like economic features or data to look out for. Just like yesterday, we are going to be looking at speeches, especially from Fed officials from the United States, which will definitely be giving us an insight into the monetary policy outlook of these economies, and of course the health situation of the economy as well. And it will also be giving us insight into the potential future policy actions from this economy. And the anticipation of this speech can significantly impact market sentiment, as traders and investors will closely analyze these rhetorics for clues about future policy directions in the United States economy. And this is one of the major factors that makes this a very important event to look out for. And if we look at the timing this event will be happening, so we have one coming up in about 8 to 9 hours from now. We have another one coming up in about 10-11 hours, and the last one is coming up in about 14-15 hours from now. So it's appropriate for us to keep tabs with this timing so that we can position ourselves strategically for this moment. And of course, we all know that as technical traders, the anticipation of this event alone has a way of influencing the market sentiment, which of course makes price action transition in a particular way to form a pattern or structure that we can easily identify on the chart, and of course use them to strategically position ourselves for the next move. Then another event I wanted to emphasize was the it's a very low tier economic feature from the Japanese economy, and it has to do with the wages in the Japanese economy, which of course did not do very well yesterday. It wasn't a welcoming data, as the Bank of Japan were expecting something more robust to further buttress that inflationary pressure in the Japanese economy is reducing, as the Bank of Japan governor speculated at the beginning of this month. But we do not know how the bank is going to react to this, though we still have this hawkish tilt that there is likely going to be a pivot from their current ultra loose monetary policy as early as the month of March stroke April of this year, which of course has given a glimmer of hope to buyers of the Japanese yen, though we saw some little bit of traction in favor of the yen through the Asian session, which did not last long, and we are going to be looking at that today to see how we will position ourselves for the next move. So I encourage us all to stay tuned in so that we don't miss out on any of the valuable ideas we will be deliberating on today. So with that being said, here we will be diving right into the business. I see your comment, Ronald Kalnin. Good morning to you. Glad to have you around with us this morning. So with that being said, let's dive right into the business. And I tried to load up this chart early enough. Okay, it's finally loaded up. So the first asset we are going to be looking at today is going to be the US oil spot. And on the US oil spot, so far this week, we've had roller coasters of buys and sells. Though at the beginning of the week, we were selling this asset. Price moved about 80 pips thereabout in our direction to the downside. But unfortunately for sellers, we saw buyers come in to take us out of that position at a worst case scenario, break even, or probably sorry, excuse me please, I'm having a little bit of sore throat and it's still healing at this point. So we had a sell position at the beginning of the week, which did not last long, and we saw price take us out of that position as buyers come in, evolving into engulfing bullish candle, giving us signals that we are likely going to be buying on the second day of the week. And we actually capitalized on that bullish opportunity. But for the sake of those who are not part of our earlier editions, let's quickly run through what we saw at the beginning of the week that made us to buy this particular asset. And please remember that our analysis on the Forex Morning Mastery is basically on the 1 hour time frame, which is our execution time frame. Now, if you want to have a background knowledge of how we got to this level or how we got to this point on this chart, I encourage you to, I will refer you to my first video for this week, where I did a top-down analysis on this asset and how we got to the point we are on the 1 hour time frame. The links are right in the description box of this current video you are watching. So with that being said, let's dive right back into the chart. Now, one of the first things that we did observe here on the US oil spot is the fact that price action started the week right above our key level for this week, which is situated at the $72 area. And for those of us who are part of our first edition for the week, I did emphasize how important this key level is for us and how it has also played a major role in determining the direction of price action in the last 4 to 5 months. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying, and the only condition that will make us sell is for price to drop below the key level. Now, at the beginning of the week, we were seeing price action trading above the ascending trend line, which we did identify on the 4 hours time frame. And of course, it's showing right here on the 1 hour time frame. This is the ascending trend line here. So price was more or less trading above the structure, resulting into price confined within a range between the $72.78 level and the $72.20 level area. Now, whenever we identify ranges like this on the chart, you know how we do it in this community. We exercise patience, as this kind of character tells us that the market is going through a level of uncertainty, and we will need price action to either break out of the resistance line of that range to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And interestingly enough, the support line of this range shares a beautiful confluence with that ascending trend line, which of course triggered our first sell position for the week. And for those who missed out, the market actually came back to retest the structure with this engulfing candle pushing price to the downside, and it moved about 80 pips thereabout. And immediately we moved our stop losses, secured the position, but unfortunately we saw buyers came in, take us out of that position. And this led to a couple of engulfing bullish candle, as you will see here. And of course we saw price action led into a situation where it broke out of the resistance line of that range where a buy stop order was situated. Now we saw price break out that structure, triggering our first buy position for the week, and we saw how the market consolidated around that area for about 12 hours or so, giving us the opportunity to join if you had missed out on the first breakout of that structure. And as at yesterday, we were considering buying this asset, considering the fact that price action was right above the ascending trend line. So we definitely want to be looking out for patterns and structures that supports the idea of buying. And as a result of this understanding, we decided to add more position at the breakout of the $73.72 level, $73.27 level. Added more positions right there yesterday, and we saw price broke out of that structure to trigger another buy position. So as at this morning, while I was sharing my commentary on this asset, we had about 2 buy positions running with a minimum. Let me see, at this point in time we still have it running. The first buy position is running with about 70 pips in profit, while the second buy position is running with about 23 pips in profit at this point in time. And with the way things are going here, looking at what has been going on here in the last 12 to 15 hours, it's quite clear that buyers are finding it difficult to find new highs from this particular structure. As you will see, our new level, the new highest level for this week, around the $73.65 area, has continued to serve as a strong barrier for buyers, as every attempt by the buyers to break through the structure has been met with strong resistance from the sellers at every point in time. And due to this continued selling pressure around this area, it is pertinent that we move all our stop losses and secure the current buy position, so that we can avoid any form of price dropping, going against us and then taking us out of a very good position into a losing position. So at this point, I will suggest that we move all stop losses to the second entry. So the worst case scenario for the second position is a break even. So the first position will be in some profit of about, let's say, 50 or 40 pips thereabout, which is still very okay, at least for the first half of the week. Now, with the situation going on right now, and considering the choppy scenario we have been witnessing in this market in the last 24 hours, it is quite clear that a lot of factors are going on behind the scenes, which is making the market participants behave in such manner. And for those of you who are with me on both my TradingView and Telegram platform, you will have an insight into what this is all about. Remember, yesterday we talked about anticipating the American Petroleum Institute weekly crude oil stockpile report, which came in yesterday, and in fact we saw a little bit of improvement where they were able to build up a 0.674 million barrels, though this was lower than the market expectation, which was pegged at 2.5 million barrels for last week. Although this figure falls short of expected, though there is a stockpile, and what it means when there is stockpile, when they are able to save, to accumulate crude oil in their inventory. It's a sign that there is high production, that's high supply compared to the demand for oil. But if the market eats into the stockpile and the stockpile reduces, then that means that there is a high demand. And when there is high demand, what does that mean? It means that price is going to soar, because the more people ask for a particular commodity, the more scarce it becomes, and price will definitely rise as a result of that. Now, despite a stockpile, accumulation of stockpile here, we can see that price still rose, which now calls for concern. Well, the answer is right in the report right there. As you will see, market participants were expecting that based on last week's activity, that the API should record a minimum of 2.5 million barrels crude oil stock for last week, but it came in below expectation. So this gives us a sign that there's a level of increase in demand, which is a red flag for sellers, of course, and definitely people bought at that point in time. Now, today we're going to be looking forward to the EIA, the EIA stockpile report today, which is coming up later in the evening. And of course, we have a forecast that supports the idea that there's going to be a high stock for last week. So we're still looking forward to that one. But based on this one we have here, it's still supporting a bullish idea. Then we had a report yesterday by the EIA where they had a short-term energy outlook. They usually do this, I think, every second week of the month. And they projected that the United States is going to be consuming about 20.4 and 20.5 million barrels per day in the year 2024 and 2025 respectively, and that the production for the year is going to be pegged at 13.21 million barrels per day. So look at the variance. We have a variance of about 7 million. So that means that there is going to be more consumption than the production. So that dovetails to high demand, and this is a positive outlook for buyers in the market. Then other factors here which we always emphasize on week in, week out is the development in the Middle East, which has been the escalating tension in the Middle East, which has of course incited concerns about oil supply, oil disruption in that particular area. But recently we had reports that indicated that Hamas has responded to the proposed ceasefire, which was planned by from Israel in conjunction with the United States, Qatar, and Egypt. Now, the potential for a ceasefire in the Israel-Gaza conflict has led to a stall in oil price appreciation at this point in time, as market participant needs to digest how they are going to react to this recent development of Hamas responding to that proposal. Now, with the situation we have right now, you can see the effect of this response happening on the charts. Now, if we take a closer look and zoom out of the structure, you will see that price action appeared to be transitioning into a downtrend continuation pattern in the form of a pennant. Now, to give you a visual representation of what I'm talking about here, look at this impulsive move to the downside. Then we saw price transition into this consolidation area, stalling the bullish momentum at this point despite the API report from yesterday. Now we have something to work with for today. And usually whenever we have a slopey consolidation phase transitioning into a downtrend continuation pattern like this, it is it's a theoretical sign that price may crash to the downside. Now, for us to join any bearish momentum here, the support line of this pennant needs to be broken to the downside, and in fact I would like to see some confirmation happen around this area for me to jump into any sell position. But mind you, we are not going to be fixated on the idea of selling alone. We're always trying to be dynamic as possible. This is just a theoretical pattern which of course the market might not follow through with what we have here. So we need to keep our options as open as possible. So what this simply means is that we are not going to be negating the idea of the uptrend continuation which we have been enjoying in the last 24 hours. Now let's talk about the potentials of the sellers. First of all, what are the things we need to see on this chart that will make us feel comfortable selling this asset based on the current structure we are seeing in the market right now? Now, to zooming into the current structure here, we would like to see price action break down that support line of that pennant, which of course is also an ascending trend line. Of course, price needs to break down the structure, and we would like to see something like a breakdown, retest of structure before jumping into a downtrend move. And to help us capitalize on this opportunity, I have a level right here at the $73.27 area, which of course, if you are with me on both my trading view and Telegram platform, you definitely must have gotten an update to this. So I'm going to be selling right here to the downside, and if price drops, we are going to monitor how it's going to be reacting to that ascending trend line we identified on the 4 hours time frame to determine if price will continue south or we will see a transition into a reversal pattern that will incite an uptrend move. So between that level and this trend line is about 70 pips thereabout. So it's more or less like a short-term trading opportunity. In fact, we cannot place any long-term trading position here based on the uncertainty surrounding the market dynamics here. So at this point, we have that area looking out for selling opportunities for today. So I encourage you to mark out that level, looking out for selling opportunities below that particular structure. Now, in as much as we have this pennant, which is the downtrend continuation pattern here, we cannot ignore the potentials that buyers still can come into this market. Things can still happen. The geopolitical tension is still going on. We have a high demand for oil based on the stock report we saw yesterday, though we're still looking forward to the EIA report today. From a technical standpoint, I would need price to break out of the resistance line of the $73.65 level, which happens to be the highest point price action has been for this week, to trigger another buy position for me. So we have a buy stop order sitting above the structure. If price continues to the upside in that direction, then definitely we have no other choice than to join that uptrend move. So let's see how the market will play out here. And of course, I will definitely be giving you updates on both my trading view and Telegram platform as we continue to monitor price action. If you have any questions, feel free to let me know in the comment section. This is my simple view on the USOILSPOT for today. And if you need some further clarifications, feel free to drop them in the comment section. So as always, I will take the next 10-15 seconds off to wait and see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And please don't forget to click that like button, give this channel a thumbs up. Your likes are valuable to us, and it also helps the channel to grow too as well. Thank you very much as you do so. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next asset on our watch list for today. So the next asset on our watch list for today is the USDJPY. And as of this morning, while I was giving an update, I did mention that we should secure all the current sell position at this point in time, as we saw price trigger took us out of the buy position yesterday at break even. Remember, we had a buy position triggered during yesterday's trading session, which of course did not move very well, and then we moved our stop losses to break even. Price took us out of that buy position and went ahead to trigger the sell stop order sitting below the 148.275 about 3-4 hours into the New York session yesterday to trigger another sell position for the week. So far this week, we had a range identified, remember, at the beginning of the week, where we saw price action oscillating just right around our key level for the week, which was situated at the 148.500 area. Now, for those of us who watch my weekend video on the USDJPY, you'll realize how crucial that 148.500 has been in this market in the last 5 to 6 months, where it has been serving as both a demand zone at some point before price broke down the structure in the month of November. And since then, price action has been trading below the 148.500 to emphasize the level of strength the sellers have around that area, making it a crucial resistance zone on our 4 hours time frame. And because of this situation, we made it our key level, where we said we will look out for patterns and structures if price action break out of that area to buy, and if price continues to remain below that key level at the 148.500, we shall continue to look out for selling opportunities. So with this understanding from that video, we came in here on Monday with a very interesting setup, as we saw price action was confined within a range just right around that key level, giving us something like price between the 148.825 and the 148.275, revealing the level of uncertainty going on in the market around that area. And you know how we do it in this community. Whenever we have this kind of range, we usually exercise patience due to the uncertainty around that area, waiting for price action to break out of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. Now, during our earlier session Monday, I did give an update on both my TradingView and Telegram platform that we can actually capitalize on the breakout of the key level during the course of the week, after noticing how it has become difficult for sellers to break through this area. And if we look at the nature of the week of the candle around the support line, it revealed that buyers appears to be gaining some traction around that area, looking at the week of this candle. So what we decided there in my update was that if price breaks out of both this descending trend line, which interestingly shares a confluence with that key level, we will be buying. That is breakout, retest of that structure. And this was exactly what happened. We saw price breakout, retest of the structure, and boom, we had an engulfing bullish candle springing out of that zone, triggering 2 buy position. Unfortunately, the first one did not do very well. The second one did a little bit well. Price moved up a little bit, then dropped back down into the entry zone. And during our live session yesterday, we emphasized that as long as price remains above that key level at the 148.500, we will continue to buy this asset. And we bought yesterday. We saw our price moved about 30 pips approximately, but price was unable to break out of that resistance line, further giving us signs that buyers are still struggling within this range. And remember what I told you on my USDJPY 4 hours time frame, that we are within a resistance line, and the inability of buyers to break through the zone further emphasize the strength of the sellers around this area. Now, this led into price breaking back down our 148.500, so we had ourselves positioned right below the 148.275 to trigger our first sell position for the week. And we saw how price moved about 50 pips thereabout, and has since been consolidating for a while And this morning in my commentary, I did emphasize that we will be adding more sell positions if price action goes on to break down the support line, which of course has been triggered at this point in time, though that second position is in a loss, but the first one is still doing very well. So let's see how far this momentum is going to go. At this point, we really do not need to, for the first position, you can move your stop loss to anywhere below the that entry point, just to secure that one, just in case price action builds up on a bullish momentum at this particular juncture. Now, there are a couple of factors behind the scenes which is affecting and sustaining some momentum in favor of the Japanese yen. Now, we saw how the US dollar, if you are looking at the US dollar index, we saw that it's going through some recovery at this point in time. So it shows that the dollar is still struggling. Maybe it could be a form of retracement of the impulsive move that it has been enjoying in the last 1 month. And as a result of this consolidation and downtake, I think the Japanese yen took advantage of that opportunity. Now, coupled with that is the hawkish remark from the Bank of Japan governor, Weather. That was about 2 weeks ago, I think, where he mentioned of the potential pivot from the current ultra loose monetary policy, which of course is a glimmer of hope for buyers of the Japanese yen. And I think market participants are still building on this perspective to see if there will be signs that the economy is actually, the inflation pressure in the economy is actually reducing, to further buttress the comments by the Bank of Japan's governor. However, yesterday we saw the data released by the Japan's Labor Ministry, which of course revealed a concerning trend as the real wages fell in the month of December. And this has been going on for about 21 months right now, and it's not something promising at all. The same thing also goes with the household spending, which also declined. I think yesterday's own is the 11th month this has happened. So this is a very consistent pattern, which is not revealing a signs that inflation is actually reducing in that economy. Now, this development for me may be considered as undesirable to the Bank of Japan, and combined with a general positive sentiment surrounding the equity market, we could have undermining factors around the Japanese yen at this point. And as you will see, as soon as price got into that 147.800, there has been a little bit of doubt due to this recent development, resulting in fresh buying attempts from market participants in favor of the US dollar. Now, the question today is, will price really break down this 140, this psychological level at 147.800 to further emphasize this? I believe that the support we are seeing here around the 147.800 is as a result of the market participant reaction to this data that came in from Japan later yesterday. On the other hand, the US dollar is still has a potential of gaining momentum. Of course, it still has a potential of gaining, especially around the expectation that the Federal Reserve will maintain higher interest rate for an extended period of time. We had speeches from Wallace yesterday. We had speeches from the Fed chairman during the course of the weekend, and of course during the FOMC press conference of last week. He emphasized that inflation is still very, very high in the United States, hereby throwing out the idea of a likely interest rate cut as early as the month of March. So as a result of this, we are expecting interest rates to stay higher for an extended period of time, and this sentiment is further reinforced by very good and robust data churning out from the United States economic docket week in, week out. We saw what happened on the NFP reports last week Friday, which came in beyond expectation. We saw a good GDP come out 2 weeks ago. We saw very good core PCE. S&P Global Publications was very, very good. In fact, everything coming out from the US economy has been good, which further emphasized the resilience of the US economy. And as it is right now, I think market participants will try to be assessing the expectations of early and aggressive rate cuts. When will interest rate cut happen? So at this point, we are still in a limbo. Market participants are not sure. The Fed chairman has not really emphasized, okay, this is when this is going to happen, or this is when this is not going to happen. So we're still in a limbo at this point in time. And of course, the US Treasury bond yield, which is a major factor that affects the US dollar, is currently doing some rebound at the moment. And we know how the US Treasury bond yield is directly proportional to the US dollar asset. So in light of this development, I think it's advisable that we follow through with the structures we have on a technical standpoint, as this will give us a clue into how market participants are thinking at this particular point in time. So to have an understanding of what is really going on here, we have a range at the beginning of the week which was broken to the downside right now. So with the situation we have here, we have the support line of that range broken right now. So what is going to happen today? Will price action come back and retest the structure that was broken to incite another downtrend move? Maybe. Or are we going to be seeing price action climb back above this level, maybe to incite an uptrend situation where price breaking out of the key level at the 148.500 will be a good opportunity to start considering buying this asset. So at this point in time, we are still within seller's territory at this point. I would just like to show you something on the 4 hours time frame, which will make things a little bit easy for us to comprehend what I'm talking about here. Now, look at the 4 hours time frame here. If you watch my video on the USDJPY, I talked about a range, a 220 pips range, which has been holding here in the last couple of weeks, as you will see, between the 148.500 and the 148.350. Now look at the support line of that range around the 148.350, and if we compare the distance between where price action is right now and that support line, we have about another 170 pips they're about to catch if price moves in that direction. So let's see how the market will play out here. Is price going to come back and retest the 148.500 or retest the support line of that range we identified at the beginning of the week to incite a downtrend that may go back into the support line, or will price action break out of the 148.500? So the structures we have on our chart today is going to be guiding our decisions going forward. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And trust me, if there are any significant development that comes up along the line during the day, I will definitely give you updates as at when due on both my TradingView and Telegram platforms today. So this is my simple view on the USDJPY. So we maintain a bearish bias at this point in time, as price action remains below the support line of that range we identified at the beginning of the week. So if you have any questions, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. And don't forget to give the video a thumbs up, please. I can see we have about 12 people on board right now, and the likes we have here is still running below 4, which is not encouraging at all. Please, I really appreciate your response. It doesn't cost you anything. Just click on that like button, and thank you very much as you do so. So with that being said, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. All right, so in the absence of no questions, I want to take this as a confirmation that we are all good to go this morning. So on that note, we shall be moving right into the final asset on our watch list today. So the final asset on our watch list for today is the my favorite, of course, the XAUUSD, popularly known as the gold spot. And as it is right now, the buy position from yesterday is still very open and valid and running, though it's running a little bit of loss, but the potential in this market still holds the buyers of price continue to the upside. Of course, while the US dollar, on the other hand, is also extending its pullback from the all-time high that it is right now. And this could be attributed to the declining US Treasury bond yield and a market sentiment favoring risk, prompting increased buying interest in the gold asset. And from recent influx of stronger US economic data, which I did mention earlier, and then the hawkish comments from the Federal Reserve Chairman, and of course other FOMC officials, other Federal Reserve officials during the course of the week. And of course, we're still looking forward to more today. We have 3 of them talking today, which will also be giving us an insight into the monetary policy direction of the Federal Reserve to give us clues and impetus into the current market situation. And for me, the expectation that interest rates will stay for a longer period of time has also supported the US dollar in one way. And on the other hand, the indecisions surrounding the timeline for interest rate cut, which is unknown right now based on the robust US economy, is also sprinkling a shadow of doubt across this financial landscape. Now, currently, I think based on what is going on at this point in time, considering the consolidation phase we are seeing in the last 12 to 15 hours or so, I'm of the opinion that market participants are very cautious at this point, not to commit themselves into any significant aggressive bet at this point in time, waiting for clarity in the form of waiting for events. And since we have no event, we look forward to the Fed official speeches to give us insight into what to do. So I think that is why we are having this consolidation phase going on at this point in time. Now, if we look at the structure from a technical standpoint, remember we were selling at the beginning of the week. We sold and price came back into our entry point. And as at yesterday, our sell position went into a loss. We saw price hit our TP target around this, our stop loss around this area, giving us our first loss on the XAUUSD for this week. However, if we look at what has been going on here since Monday, despite the bearish momentum we took advantage of at the beginning of the week, you will see that price action appears to be gradually transitioning to finding higher lows in this market, giving us a beautiful ascending trend line to work with. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no other choice than to look out for patterns and structures that supports the idea of buying. So our buy position from yesterday, though, is running in a loss of about, in a loss of about 16 pips, 17 pips thereabout. I still think that it still make a lot of sense to still consider this bullish momentum, since price action still remains above this newly identified ascending trend line. So in that regard, we are going to leave this buy position running, and let's see how far it's going to go. And if price goes ahead to break out of the $2,042 area, which happens to be the highest level price action has been for this week, then we will be adding more buy positions to our existing trade, as we have a buy stop order sitting above the $2,042 level as well. So on this one, we will maintain the bullish bias here. We keep our buy position running, hopefully that it doesn't get doesn't hit our stop loss. But if it does, no problem. It's okay. We'll continue to keep trust in our analytical approach and see how far it's going to take us for this week. Now, in as much as we're looking out for buying opportunities above the $2,035 level, which happens to be our key level for this week, that reminds me, for those of you who had not watched my weekend video on the XAUUSD, please go ahead and watch that video, as it will give you a background knowledge of how we were able to identify that key level at the $2,035 area. The link are right in the description box of this current video you are watching, so you can check them out after the live session. So in as much as we are looking out for buying opportunities here, what happens if we get taken out of this buy position and price drops to the downside? What are the things we want to see on this chart that will make us feel comfortable joining a bearish move? However, it's worth noting that price action is trading below our key level, which of course welcomes the condition of looking out for selling opportunities. But I would rather want to see price break down and retest that ascending trend line. That is this ascending trend line should be breached. If we can see this ascending trend line breached today, then we would like to see some confirmation like retest of structure. And if this happens and we see signs that buyers are finding it difficult to climb back above the ascending trend line or break out of the key level at the $2,035 area, then we will want to start getting ready to sell and then manually close our buy position, not allowing it to hit the stop loss. So if we see that happen, and of course it would reflect on the chart as something like continued selling pressure around this area, then we can join a bearish move to the downside. And if price goes ahead to break down the $2,027 area, we will be adding a sell position there, and a further breakdown of the $2,015 area, which happens to be the lowest point price action has been for this week, will definitely be welcoming more sell position in this particular market. But trust me, I will be with you, and of course during the XAUUSD live window we shall be monitoring this together real time during the New York session today. So I dropped the link to the XAUUSD live window. It is pinned at the top of the comment section, so you can go ahead and click on that link, click on the notify me button so you can get notified as soon as we come on live. So the XAUUSD live session officially kickstarts about 5 to 10 minutes into the New York session, and it lasts through about 5 to 7 hours depending on the level of trading activity for that particular day. So I would love to see you right there in the comment section of the XAUUSD live window. So this is my simple view on this asset for today. So I encourage us all to mark out this level on the chart, as we will be needing them to guide our independent trading decisions for today. And if this session has been of immense help in making your independent trading decisions for today, I really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So I look forward to any questions or inquiries you want, or you need some further clarification. So in that regard, while we gradually come to the end of the Forex Morning Mastery for Wednesday's trading session, I will take the next 10-15 seconds off, see if there are any questions before we round off on today's session. Thank you. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note I would like to call it a day here. It has been a wonderful moment with you guys. I really appreciate every single moment I had with you as we took on 3 of the assets on our watch list for today, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify basic setups using our tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you all marked out these levels and structures as we illustrated during the course of the session. And if you had done that, well done. Kudos to you for doing that. So all we just need to do is exercise patience and allow these structures to mature. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here. If you did, of course, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use this information to make your own independent trading decisions. So I look forward to seeing you all same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. I can understand that this week has been very slow and sluggish. I can understand, and we had some couple of losses, but it's okay. We've not really seen something significant. Well, that is the market. There's nothing wrong with our analytical approach. That is just the market. And let's keep faith in the analytical approach and allow this the approach to guide us accordingly. I'm very, very sure that if weeks like this, when the market starts very, very slow, towards the end of the week we see big traction, and let us not lose hope right now so that we can be on standby to capitalize on that next move when it finally happens. We don't know when it will happen, but when it happens, we want to be on standby to capitalize on that move. So on this note, I want to wish us all the best of luck today. I see your comment, Princess Aboluokwe. Good morning to you. Glad to have you around with us today, and I wish you the best of luck, and I look forward to seeing you all in the comment section of both my Trading View and Telegram platform, and of course during the XAUUSD live window later today as we continue to monitor price action. Do have a wonderful evening. Trade smart, trade consciously. Bye bye.